In today's exploration of the world of investing, we take a deep dive into recession-proof strategies with a particular focus on the insights of a financial luminary, Ray Dalio. As a name that resonates throughout the financial landscape, Ray Dalio is the brilliant mind behind Bridgewater Associates, the largest hedge fund on the planet. In this insightful video, we'll delve into Ray Dalio's recession-proof investing portfolio, his uncanny predictions about economic crises, and the strategies he advocates to help us navigate the turbulent waters of uncertain times. Before we plunge into the intricate details, let's take a moment to familiarize ourselves with the man who has been instrumental in shaping these strategies. Ray Dalio, a 72-year-old billionaire and legendary investor, has etched his name in the annals of finance. His exceptional track record is marked by his ability to foresee and even predict major economic upheavals that have reverberated around the world. Notably, Dalio accurately predicted the 2008 financial crisis and, more recently, anticipated the long-term financial ramifications of the COVID-19 pandemic. At present, he's sounding an alarm about the specter of a new economic catastrophe looming on the horizon. But there's a silver lining. His insights come with a roadmap for preparation and action. So what precisely are the warning signs that Ray Dalio is highlighting? According to his analysis, there could be a tightening of financial conditions, which could make it more arduous and costly for Americans to secure loans, mortgages, and other forms of debt. This could lead to decreased spending and investment, subsequently exerting downward pressure on stock prices and other assets, possibly tipping the economy into a recessionary spiral. Dalio emphasizes the domino effect that could result from this situation, but his concerns don't stop there. He also sheds light on ongoing tensions and conflicts, particularly in the context of China, which could potentially exacerbate the looming economic crisis. Speaking of tensions with China, Dalio has been a vocal proponent of recognizing the potential risks of misunderstandings between the United States and China escalating into something far graver. The ever-evolving financial and economic landscapes, coupled with internal and external conflicts, have created a stormy backdrop. Dalio's urging us to consider the ripple effect of these potential conflicts on the global economy. China's ascent and its associated challenges to establish world order present significant variables that could amplify tensions and exacerbate economic challenges. Now, looking ahead, what does Ray Dalio foresee in the next couple of years? Brace yourself, there's a bumpy road ahead. With the possibility of an expansion phase, inflation and tighter monetary conditions could become the norm. This spells trouble for investments in the stock market and retirement plans, as stocks and bonds could bear the brunt of these shifts. Internally, political turbulence and wealth disparities only add to the atmosphere of uncertainty. But it's not all doom and gloom. Ray Dalio offers strategies to navigate these challenging times with resilience and prudence. Firstly, he underscores the importance of assessing your financial risks. How substantial are your savings for rainy days? Dalio's perspective is clear. Savings equate to both freedom and security. He suggests starting by calculating how many months you could sustain yourself without a source of income, and then ensuring you have more than that as a safety net. Another critical strategy he emphasizes is portfolio diversification. Dalio's recommendation is to adopt a balanced approach, allocate percentages to various types of assets that tend to perform well under different economic circumstances. For instance, he suggests distributing 30% of your portfolio to stocks, 40% to long-term U.S. bonds, 15% to intermediate U.S. bonds, and 7.5% to both gold and real estate. Crucially, he advises on the necessity of annual portfolio rebalancing to adapt to the evolving market dynamics. The video also delves into the tangible benefits of historical analysis, not only for individuals, but for society at large. When leaders comprehend historical patterns, they're more inclined to make decisions that foster economic stability, political harmony, and societal progress. This understanding translates into the avoidance of catastrophic conflicts and wars, thereby creating an environment conducive to improved job opportunities, higher wages, and enhanced living standards for all. But how can you, an ordinary individual, contribute to this process? Education is the key. Educating yourself about historical trends, global dynamics, and their implications equips you with the insights to make informed decisions. Armed with this knowledge, you can advocate for leaders who prioritize historical understanding and evidence-based decision-making. On a personal level, you have the power to make a difference by supporting local businesses and investing in your community. These actions contribute to economic growth and the creation of jobs. In the midst of global tensions, the significance of promoting peace and understanding cannot be overstated. Dalio's insights serve as a stark reminder that conflicts carry profound economic consequences, disproportionately impacting the most vulnerable segments of society. By voicing your opinions, raising awareness, and championing peaceful resolutions, you play a role in shaping a more promising future. Collaboration and finding common ground become pivotal during times of uncertainty. The Ray Dalio All-Weather Portfolio, aptly named for its adaptability to any economic climate or investment style, is a strategic masterpiece. Crafted to ensure steady and deliberate growth while safeguarding against extreme market volatility, its design encapsulates a prudent balance between preservation and expansion. At its core, the portfolio embodies diversification, a cardinal principle of risk management. Unlike strategies overly tethered to specific sectors, the all-weather portfolio charts a course that fits a multitude of investment needs, economic styles, and periods of growth. This financial marvel originated from the depths of Bridgewater Associates, an asset management titan renowned for stewarding the wealth of billionaires. As a custodian of generational riches, the firm has incubated various strategies that empower investors to preserve and augment their prosperity. These strategies operate as blueprints, tailoring investment portfolios to individual aspirations, while anchoring them with goal-centric approaches across diverse asset classes. At the helm of this visionary creation stands Ray Dalio himself. The genesis of the all-weather portfolio traces back to 1971, when Dalio, fresh out of college, was working as a clerk at the New York Stock Exchange. The backdrop was a momentous suspension of the dollar's convertibility into gold, orchestrated by President Nixon. Anticipating a stock market crash, Dalio was instead confronted by a surge, a pivotal lesson in the limitations of personal experience when it came to investing. The divergence from the Bretton Woods Agreement was projected to erode the dollar's value, yet the stock market shrugged off the impending storm. The reason was simple. The US dollar retained its status as the world's reserve currency. In the subsequent chapters of his journey, Dalio would coalesce his insights into Bridgewater Associates, achieving formidable financial success. A considerable chunk of this triumph owes itself to the all-weather portfolio, a creation meticulously fashioned through Dalio's profound understanding of the interplay of financial components. The moniker all-weather captures its essence. The portfolio's primary mission is to thrive across all economic terrains and diverse financial landscapes. Central to the all-weather portfolio's composition and the regular realignment of asset classes is the concept of risk parity. This strategic underpinning uses risk as the compass for asset allocation, an artful balancing act across stocks, bonds, and other investment avenues. Risk parity enables savvy investors to orchestrate investments that calibrate risk across economic conditions, ensuring that their investment strategy never strays beyond a comfortable risk threshold. The portfolio's inception dates back to 1996, leveraging the principles of risk parity. Its foundation rests on Dalio's insight that understanding the performance of an asset class necessitates grasping its interconnectedness with the broader economy. This understanding empowers regular portfolio rebalancing, an exercise that begets risk parity and equilibrium. So, what are the constituent elements of this portfolio? The all-weather portfolio follows a structured asset allocation designed to harmonize with its objectives. It's an ensemble cast of asset classes engineered to weather the tempestuous seasons of economic cycles. Specifically, the portfolio's asset allocation comprises 30% stocks, 40% long-term bonds, 15% intermediate-term bonds, and 15% commodities. The foundation of the all-weather portfolio rests on its adaptability to varying market conditions. Its performance isn't a product of one-size-fits-all thinking. It's the result of deliberate allocation that champions resilience across growth and downturns. In the original design, the portfolio integrated emerging market credit to mitigate currency risk. At its genesis, inflation-linked bonds were not widely available in the United States, necessitating this innovative approach to hedge currency risk. Historical performance attests to the potency of this portfolio. It has demonstrated consistent growth even during market downturns, illustrating its resilience across financial markets. The standout feature is the portfolio's performance across bear and bull markets alike. Its performance isn't tethered to the prevailing global economic conditions, standing as a testament to its robust design. However, it's crucial to underline that past performance does not guarantee future outcomes. The dynamism of market conditions means that the portfolio's success may not be perpetual. The investment landscape is ever-evolving, and unforeseen shifts can impact the trajectory of the all-weather portfolio. While historical success is indicative, it isn't a steadfast predictor of what lies ahead. Crafted with meticulous care, it epitomizes diversification, adaptability, and equilibrium. Yet it's imperative to recognize that while the past paints a promising picture, the future remains unwritten, susceptible to the currents of change that defines the investment landscape. Thank you for tuning in, and stay tuned for more enlightening content ahead. Don't forget to like, share, and subscribe.